So today surprised me. I wasn't expecting it to be as bullish as it was. You can see we're going to be closing near the highs here. Coming into today, what I thought was going to happen was that after yesterday's doji bar, we would test below it at least. But today came right down to the low tick of yesterday and didn't actually go below it. So it had a perfect double bottom with yesterday and then basically trended up for the rest of the day. So a bit of a surprise to me there. But, that speaks to the strength of trends. Right? I mean, we've been going up since January 13th, and we continue to get bull bars. We continue to get bull days. Right? We've been having these gaps all the way up, and until those gaps stop, then you should just be continuing to expect higher prices. And looking at this strong rally going into the close of today, to me that's a sign that we should be expecting higher prices tomorrow and probably next week as well. Or at least what it means is that the bulls are confident enough to be buying into the close. They're confident enough that the market is strong enough that they can continue buying here at the end, and they're expecting more up, because why are they buying so aggressively into the close here? They want to get an early position going into tomorrow. So that's kind of what the premise is there. Starting off today, the first two bars, there's kind of a special pattern that I look out for. So you'll hear me talk about the first two bars a lot, but what I'm talking about specifically here is when there's a gap down and then two bull bars. And a lot of the times what will happen is once it goes above that second bull bar, then it will make several attempts lower, kind of like this. It can make a strong attempt, but it doesn't actually go below the low of the first bar, and then the day ends up trending upwards. So it's kind of it's not something that happens every week or even every month, but occasionally it'll pop up where you get these gap down two bull bars at the start, and then as the market moves up a little bit, it makes these like fake out attempts to go lower, and it did that here. So that's something I try to watch out for. And I didn't like trying to buy above this after this strong sell-off here. Looking at it, you could say we were trying to sell off right into the top of this channel. So I didn't actually buy here because of that. But in a lot of cases where we do have a gap down and two bull bars, we will have a couple fake out attempts at the start, and then we end up turning up for the rest of the day. So, kind of something to watch out for there. Looking at this rally we got here, first bull bar, second bar, third bar, fourth bar, fifth bar. At some point, you have to determine that this is a breakout. We're breaking out above the high of the range, breaking out above the moving average. We have several strong bull bars, including some gaps. Like we have a gap here, and a gap here. All right, so we're having strong bull bars, we're having gaps, closes above prior highs. Market's probably going higher. And let me pull up the 15-minute chart. I want to show something on the 15-minute chart here. So this is the 15-minute chart, and also notice this really strong bull bar we're getting into the close. So that's pretty optimistic for tomorrow. 15-minute chart, the day opened here on this bar, and then look, once we get these 2 bars, 3 bars, 4 bars, all bull closes, market is probably going higher. And even if it doesn't go higher, it's probably going to at least go sideways for a bit and allow you to think about what the market's doing, and would give you an opportunity to get out. So I did end up buying I think it was this fourth close, then made a little bit on that. When you have a breakout like that, consecutive strong bars, the odds of getting a measure move up from the low to the high of that is 60%. So buying the close of that, putting a stop below, and then going for measure move up, you have a 60% chance of it getting up here before it comes down here. So, if you can handle the risk, trade small enough and put your stop down here and just, wait through all these pullbacks, then your odds are decent. That's that's an edge. If you have a 60% chance of coming up here before you get stopped out, then you have a little bit of an edge there. So anytime you get like several strong bars like this, you should at least expect a second leg. Now, what's possible is that this is pullback here, then second leg up, or bigger pullback, then second leg. That's possible that like this would be the second leg, and then we end up, moving down. But after this double bottom, strong move up, at a minimum, I would expect us to get something like this. But, majority of the time, greater than 50% of the time, we actually end up getting something like this, where we go up for the measure move before coming down here. While we're on the 15-minute chart, I just wanted to point out this wedge that I see here. And that's important because it led to a buy setup. First push down, second push, third push, and you have a bull bar closing near its high, testing the moving average after this bullish strength. So probably reasonable to be buying above that. And that would take you right up into the high. So I think that makes a lot of sense trying to buy there. But back to the 5-minute chart. We were talking about gaps here in the strength. So just like on the 15-minute chart, when you start to see multiple bull bars like this up, you're likely going to have more up. It might be the start of a trend. This would be your breakout phase. And then, different ways to draw your channel. Maybe this is your channel here. Breakout, channel, and then trading range. Then sometimes you have breakout, and then the channel will be much more significant like this. And this is really what you want to be hoping for. So if you can manage to stay long and keep your stop down here, then move it up, and then move it up, and continue to move it up above these lows, then that's how you can stay in and eventually get something like this several hours later. Notice we did get a wedge here, these 3 pushes up. So, maybe getting out below this bear bar here, this second bear bar. But it's right up against the moving average. There's probably going to be buyers there. We're probably going into a trading range environment, so probably don't need to get out below that. And if you didn't get out below that, you probably could have stayed in it all through this if you were long. But if you did get out, I think a reasonable place to get long again is above one of these bars here, or really above any of these bull bars. So we have a wedge here, these 3 pushes down, and then this bar closes above the moving average, and it's doing that after this wedge and double bottom. These are also higher lows than this low and this low. Right, so we're starting to get a series of higher highs and higher lows, and a good bull bar above the moving average, and also a follow-through bar above the moving average. So I think either of those bars are good for a scalp or a swing trade. So if I'm doing that, I would either go for 5 points and get out somewhere here, or try to draw on your measured move, or your 2 times your risk and get out. Put your stop right below it, and then get out at that 2 times your risk, or maybe 3 times or 5 times your risk, and try to go for a larger bet up. But I think in this case, if you were buying here, it'd be okay to be trying to get out at around these highs, because you do have so many other highs previously, like yesterday's highs and then today's high as well. So probably better to just go ahead and be getting out at that level. You see, I have another buy marked here. This was a pretty small bar. It's only like 1.5 risk, which in some ways is good, right? I mean, your risk is small. That's what we want. But when your risk is small, your probability also goes down, because it'd be really easy for the market to go below it if you buy here. So in that case, well, going for 5 points. So it's funny, I consider 5 points a scalp. And in this case, if you're going for a swing trade, your swing trade is actually less than the scalp amount. So if I'm scalping for 5 points, but if you're calling this a swing trade, buying here and 2 times your risk, then that's only about 3 points there. So it's kind of funny. In this case, a swing trade would be less than what I would consider a scalp. And because of that, I think you should try to go for 5 points here. So I would at least expand that up to about 5 points, just because I feel like your odds of getting stopped out there are higher than like one of these bars here. So to offset that lower probability, you need to go for a little bit more at least. Eight bars down here, and I felt like this was going to have a second leg down, at least a little bit, kind of like how the market here had about 8 bars up. Then we had a pullback, and then after that pullback, we had a small second leg up. We had a little bit more up here, this second attempt right here, and I felt like we were at least going to have at least another bear bar down after a pullback here. We didn't end up getting that. And then, as I think about now, this strong rally that happened into the close, this might be these bears getting trapped and buying out of their shorts. So, what bears are doing, they're saying, oh, we're down 6 bars in a row, 7 bars in a row, 8 bars in a row. And they're selling these closes. And they're expecting that any pullback that happens will return to this price at a minimum. So they're selling these closes with confidence that they can sell more higher and then get out on their first entry. But we can see you sell this close, and then sell somewhere higher. Let's say they waited to sell up here. So the first time it actually went below a bear bar, they sell up here. Market came right down to that price, and it kind of came right down to the tick at that price where bears that are selling here and then selling below the first bear bar, this is where they'd be. This is their midpoint. So probably a lot of bears are trying to get out of their shorts here, and I'm not sure how many of them really did. So they were trying to get it out of their position here, and this is kind of their last attempt to get out here, and they couldn't. And then all these big bars here, probably at least part of that is the bears that were trapped and had to buy back their shorts at the end of the day. So yesterday, the bears won, and they were able to get this collapse down at the end. But today they lost, and they were actually trapped, and the bulls took over at the end. So that last hour, that last 30 minutes, 20 minutes, it's always interesting because there's usually often there's either a strong collapse down or a strong rally. Usually it seems like the strong collapse down is more common than a strong rally. We don't really see the range going up another 50% in the last 20 minutes. This is less common. More common would be that the bears do win somewhere through here, and then it collapses back down kind of to the midpoint of the day. So looking at tomorrow, let's pull up the daily chart, see how it's looking now. So tomorrow is Friday. It's the end of the week. And on Friday, the open of the week, the low of the week, the high of the week. These are all important prices, even more so on Friday, because the bulls in the market are wanting to have the weekly bar close as high as they can, and then the bears in the market are trying to make the bar as weak as they can, so that going into next week is better for their positions. So looking at this week, the 20th, this is the first day of the week. So we have the low of the week here, which is pretty far down, right? It's unlikely we would shoot down 100 points tomorrow. And then right now we have the high of the week. My computer froze up there a sec. But looking at this week, this is the low of the week and this is the high of the week. Bulls are going to try to close it above today's high. And I don't think bears have much of a chance of selling it off down here, but they might want to try to weaken it into the close. So, right, if they can get a bear bar tomorrow that closes somewhere down here, then imagine the weekly chart would open down here and then have somewhat of a tail on top. So the bears will try to sell it off tomorrow while the bulls are going to try to buy it. And we are getting up near the high of this range that we've been in. Like we've already surpassed this FOMC high, and we're getting up near these previous highs. So and we're far from the moving average. So I'm concerned that the bulls are going to kind of stall some up here. That, even if they can break out above here, which the momentum seems like, like it is going to break out above here. Even if it does do that, though, I feel like we're probably going to have at least a few sideways to down days here soon, after this fairly strong bottom here. This is almost a V bottom, right? Where we're going down strongly, then we end up basically reversing just as quickly. So, this kind of looks like a V bottom to me, and especially after today being kind of surprising me and not going below the low of yesterday and closing so strongly. That means to me, like, we'll probably have more up, even if, even though I expect we'll have a couple days sideways to down here soon. It looks like this breakout is going to work out here. So, overall for the market, that's optimistic. So while I'm recording, I wanted to talk about Bitcoin. This is the micro Bitcoin futures. That's what I'm seeing on this chart. I'm seeing the market cycle play out here. So we have this. So we have this breakout that happened here, several strong bars up, and then that turned into a channel here. Then after that, we had this trading range. So breakout, channel, trading range. And this is the market cycle. These are the three stages of the market. So now that we're in this trading range, we need a breakout to happen for us to basically get out of this trading range. And the trend has been up, so that means the breakout is slightly more likely to be up. But I just want to point that out, that we are in this trading range now. And it's best to trade Bitcoin like it's in a trading range until it breaks out one way or the other. So I just kind of saw this pattern here and thought it'd be interesting to talk about. So that's all I got today, guys. Thank you for watching, and see you next time.